Hello, this is Mike. In this video, I want to show you something I've been working on I call it my CrystalBall program that I developed in Excel. And it's using probabilities to try to determine what the closing price will be on the following day's trading session. And I want to show you today was Monday, April the 11th. And here's what the market did today. You can see it went down quite a bit. Well, here's Friday, and you can see there was a little doji, but it went down a lot today on Monday the 11th, April the 11th. So we're going to look at these probability lines and see if we can see a correlation between the lines and the closing price here on this candle. So I've set this program. This is the marker, and it's selecting Friday's data to try to determine what the market will do on Monday the 11th. So that's setting that. Now let me go in and let's see. Here's the CrystalBall view of the probability lines for Monday. And this is what I would have seen over the weekend and on Friday after 4 o'clock. You can see this doesn't have any annotations added to it yet. It's because Monday hadn't occurred yet at this point. And but in a minute I'll show you after Monday has occurred, and after 4 o'clock on Monday, I was able to add the lines showing where the actual closing prices and the high and the low were. And if you can correlate the lines on this graph with those prices. Now, obviously, prominent points are right here at the end of this clear space and at this end of the clear space. Now, just from viewing a lot of these, if you just say this kind of looks like a fish, this white space, here's the tail, here's the head. Well, when you've got a view like this, the price kind of practically always goes towards the head end. So that would be the first indication that the price was going to go down this day. Now, it just so happens this point is exactly the point where it opened at 9:30 this morning. So that is a relevant point. But now and I just give it away, the closing price was actually the intersection of this line and this line, this probability line. And I have a feeling that, well, of course, that's a major intersection. That's the lower one, and it's a prominent line. And here's another prominent line, kind of set apart by this larger gap that's between the probabilities. And actually, when the price got to here, of course, when the price got to here, it was near 4 o'clock. But it didn't have enough, you might say, bears in the market to push it over this gap to go that extra probability. But let me get the one. Now, this is what I would have seen now they had to read these lines in order to tell where the market was going to close today. One indication is in the top view, this is if it would go up, you can see there's no intersections. There's these lines, no intersections, meaning that it's not very likely to go up. But there's a lot of intersections in this lower for the price to go down. Now this origin is here's the prices are along the x-axis here, and this origin is the closing price on Friday. So If it's going to go down, it would go down from that closing price. And like I say, it opening price this morning was right here, and that's I think that's what the futures were calling for also at that point. So it did go down, and somewhere in these intersections is the information we need to tell us what the closing price would be. And like I say, it is this point right here. And that is a very significant point. It's you can kind of see these lines are in clusters. Like here's a cluster, and here's a cluster separated by this distance here. And like I say, it was the bottom of this cluster is where the price closed. Now let's look to the annotated one. There we go. Now the close is the black line. The low is this light blue line. The open is the green line, and the high for the day is this red line. And these are all with the price being along the x-axis. Okay, here's the price where it closed on Friday. Let's see, that would have been 11, 10, that would have been April the 8th. There's where the price closed at right here. I can't say about 116 to 117. Okay. 116.33 is where it closed on Friday. Now this stock is the SPXL, the 3 times volatile of the S&P. So, like I say, one clue where you've got the intersections for the close is indicated by an intersection, and there's an intersection in here marking the close. This is close to the intersection. This was actually the low is where this line intersected this probability line. That would have been the low for the day. Okay, well, oh, and by the way, this squiggly line is the actual price as it went through the day. Let me see if I can scoot over here. I want you to see the secondary axis. The numbers on the secondary axis are the hour of the day in military time with decimal hours. So that would be, let's see, 13.5. That would be 30 minutes after 1 o'clock. And the very top is 4 o'clock. So there would be 3:30 and 15.5 and 4.0. 1400 would be, 1600 is 4 o'clock. So, and that's the actual way the price went. Here you can see the support levels. Right here's the support level. It went down to there and didn't go any further. And that should correspond with a certain intersection in here. Let's see if we can see that. When in order for the price to go through an intersection, it usually takes some time. And you can see here it went up above and then crashed through the intersection at this point. And it's one of these intersections, probably that one right here. Looks like it's where this top line went through this top probability line here. You see this probability line is a lot, this one's changing more than this one. That means probability is more firm, where this one can change. And when it changed right here, that's what set this level of support. And then it lost that support and came on down to where there's a line in there that intersection that marks the close. Well, anyway, that's what I've been working on, and hopefully in a few weeks I'll have it a program that's marketable. But I want to let just the public see what I've been working on. Thank you. This is Mike.